Hi, this is James Sugg at Westpac with the end of day report for Monday the 9th of July. Another down day on equity markets. A few factors driving that. We had the Chinese Premier talk about the likelihood of further easing. Now it's interesting that normally you would expect talk of easing to excite markets. More money around means asset prices can rise and so on. But as we saw with the moves by various central banks last week, including the Chinese themselves, we didn't see much of a risk rally. We didn't see much benefit accrue to stock markets and commodity prices and so on. And the same as today. I mean, the focus seems to be more on the reason for the easing, which is concern about the economy, and that was definitely expressed by Premier Wen. So I think that there is a real sort of black mood in markets, and it's one of the reasons why we never really saw markets shift into positive territory in any sustained way, at least so far today. The US trading session, of course, continues, and tonight after the trade, we see our co-op report, so we're just starting the earnings season. So that might start to drive US markets at least a little bit moving forward. But it was mostly about Europe today, with no major US data released. As well as one US thing I'll mention, Richmond Fed President Lacker, he's a known hawk, he apparently bristled during a radio interview when the Fed's conditional commitment to keep interest rates close to zero until the end of 2014 was called a pledge. He seems to think, or he said he thought that rates could move up, or could move, I think it was the exact quote, as early as 2013. No real data. We're getting consumer credit numbers a little bit later this evening in the US. In Europe, we had the Centix Investor Confidence Survey. It fell to a new post-recession low at, in fact it's running now, this is the July number, it's running now at the level it was running after the Lehman Brothers collapse in 2008. In other words, we're already seeing European investors sort of feel the way they did once they were absorbing the news of the Lehman Brothers breakdown in September 2008. So we also had a French business confidence survey, which was running at it slipped further, and it's now running at, or still running at though, the recessionary levels that we saw in 2008. So just lots of, it's happening with all the European business surveys. They're slipping, they're sliding, and now starting to even weaken further than they did during the first few quarters of the previous recession. German exports, though, they rose 4% in May, more than reversing the April drop. So Germany can still throw up the occasional robust activity statistic, it seems. The new Greek government, three-party coalition, has won the confidence vote. So Greece finally has an administration after 2 elections in a long time. The country, of course, is still mired in the 5th year of recession, and tax collections are way down, and it can't access financial markets, and it's reliant upon bailouts from external benefactors elsewhere in Europe and the IMF under very stringent conditions, which the new government will certainly seek to have softened somewhat. And in fact, the other Euro area EU finance ministers will get the chance to meet the new Greek finance minister. Well, they're doing it right now with the EU finance ministers summit proceeding today and tomorrow. It's a bit of a shame though, the EU leaders 10 or 11 days ago basically agreed to recapitalise the Spanish banks directly without the Spanish sovereign or Spanish government having to take on responsibility for that debt. Subsequent to that, of course, various officials and politicians in some countries have said that's not possible, and so big step back then. This EU finance ministers meeting is supposed to see some sort of agreement reached on exactly how the Spanish banks can be recapitalised. Now there have been some favourable comments coming through at the side of, out the side of the meeting, but nothing's been determined yet. And there are a lot of issues that they are looking at, but some of the officials have been saying that don't expect any real decisions to come too quickly. In fact, there's now talk already of a July 20 meeting before things will be firmed up somewhat. So European politicians, it seems, are back to their old tricks, either deliberately lowering expectations so that we're surprised pleasantly, or simply expressing reality, which is they really can't get things decided, let alone done. Spanish bond yields above 7% again today, so certainly markets don't have much confidence in the ability of the finance ministers to reach the decision that markets would like to see. European Central Bank President Draghi, he was talking about the European economy and said that the ECB he reiterated that they will do everything to maintain price stability from both directions. A hint that maybe if deflation were to become a concern, they'd do something about it. And ECB staff are searching for actions that could attenuate the current crisis. Well, I tell you what, Mr. Draghi, a form of quantitative easing would certainly help. Buying the bonds of countries like Spain, holding them to maturity, not taking seniority over other investors, holding their yields down. But a lot of people, I think, are now giving the ECB that advice, and they haven't taken it thus far. And there are some legitimate reasons for that, but saving the euro, if you want to be dramatic about it, is going to require a bit of rule bending, I suspect. Okay, that's about it in terms of the events today. In terms of markets, where are we? We've got the London market, actually its biggest loss in a couple of weeks, down 0.6%. The French market down 0.4%. The Germans off 0.4% as well. The Italian market's down. Actually, the Italian market is up 0.6%. I'm sorry, and the Spanish market down 0.75%, and the Dow is down 0.4% at the moment. As I say, Alcoa to report earnings after the close. Commodity markets, we've got gold prices at $1,591 an ounce. That's up 0.75%. Copper's up 0.8%, and oil up 2% today. I think that those moves were in relation to the China easing story, but it wasn't all markets that benefited from that. The Aussie dollar, it's at 1.0, or just where it was on Friday, just under 1.02 against the US dollar. And our friends at the NAB will put out their business survey later today in Sydney, and then we put out our consumer sentiment numbers the next day. Okay, that's it for Monday. I'll be back tomorrow.